If you want to know my thoughts on the monthly candle close and what could lie ahead for this month of September with Bitcoin and the crypto markets, then this video is for you. What is up, guys? I hope you are having an awesome day. It is September 2nd, so that means the monthly candle is closed. It gives us some more insights into what the charts are saying. And as always, I believe the charts show the way before any sort of news or fundamentals, which is why I primarily try to follow the charts as much as possible and base that around a system and a strategy that I've developed over the years that keep it easy for me to follow trends. And it's all based around an if-then system. So if the price is above X or above certain criteria, then the strategy is as follows, and if the price breaks down below, then there's invalidation, and then the strategy is adjusted and different. And that is quite simply the easiest way to go about following these markets. Also, this is something that you can apply both on a shorter time frame, but that's more for like day trading and intraday trading if you like to follow the markets on that kind of basis. But you can also very much apply it to the daily or the weekly or even the monthly charts for longer term analysis. So if you're busy and you have a life, you don't want to be looking at the charts all day and you're not into day trading or stuff like that, then this is good to apply this on, say, the daily and the weekly charts so that you know you have to look at it, every couple of weeks, once a month, every 2 weeks. And it allows you to still kind of have a system and a strategy that you can follow and still try and make optimal decisions for buying, selling, adding, reducing, and so on and so forth. And I think it's just a really good way to go about it. So without further ado, let's dive into the charts and let's get started. By the way, if you're not following me yet, please follow me here on YouTube, subscribe down below, or on Instagram if you're watching this here. Make sure to follow my page, smash the like button, give this a like, leave a comment with your thoughts. I always read them personally and will respond where I can. So yeah, smash that like button and let's get started. Alright, so we have Bitcoin here trading at 25,795 here on the monthly. So before I get into these charts, let's take a look at the Bitcoin monthly returns. And this is on coinglass.com/today. It gives you this nice chart over here. So you can see the quarterly returns of Bitcoin and Ethereum. But what we're interested in here is the Bitcoin monthly returns. You can see August was minus 11.29%, which really wasn't too far out. In terms of what it did last year, was minus almost 14%. You can see, so pretty average for August, pretty on par. Now, you can see September also is mostly red, but actually not as bad as some other months in terms of the drawdown. So while it is mostly red, you can see it's single digit percentages for the most part, 3%, 7%, 5%, 7%. There was only two really bad instances, which was in 2019, which was minus 13%, and 2014, which was minus 19%. The rest is all pretty single digits. So I suspect, yes, we will probably get something in line with that if we can expect some more downside, between, 5 and 20%, 20% being the worst, I suspect. Then we're looking at potentially more downside, which is what I'll explain in the charts in a bit too. So here is the monthly chart, and as you can see, we had a big red month in August, nice down month, 2 in a row actually, and that's been a bit of a change in trend in direction since we started this nice bullish run for the initial half of the year. Now, before I share my thoughts on this month's, what I expect for this month, let me share with you the replay of what I said at the beginning of August, and then we can continue. I think what I said last month, the analysis still applies. So what is important here, the 50 simple moving average in blue, as long as we're above that, trend is bullish, and we could simply retest that. So at this point in time, that is around 26.2. It is still possible that if you see this as just a single candle, that we can still just pull back here to 26.2 this month, and then hopefully bounce back, have that hold as support, and then still continue the trend higher. So that was last month's analysis, and as you can see, that's what I said. It was possible to retest the 50 MA over here, and that's pretty much exactly what happened. In fact, it went down a little bit and closed slightly below it. So now we're in a bit of a predicament where if this does indeed drop back below it, and it has, It's ever so slightly, so it's a little bit in a gray, tricky zone. It could bounce back up here. That would be very, very nice if we get that. But of course, it could also continue lower. And if you've seen my last 1 or 2 videos, I've talked about the possibility of another black swan crash like March 2020. And technically, I'll show you in a second also again, but I shared this in my previous videos too. On the weekly chart and the 3-day chart, we've lost some key moving averages for the bullish trend. So technically, that is leaning towards the bearish side, and more downside is a possibility. So unless we reclaim some of these key MAs, and I'm talking about the weekly, the 200-week moving average, or the 3-day 50 moving average, what we need to do is we need to reclaim 28,500. If we get back above there, we are back in full-blown bullish trend territory. And I think at that point, we'll probably see the continuation to 35,000 or maybe even 48,000 after we reclaim that. For now, we have to assume the trend might have flipped back bearish as it did in 2019, right? This was 2019, and you can see over here, we had this move up in a similar way. We had this move up, then we had the slow bleed down. We had the halving about over here was the halving, and then we had the bull market. So far, 4-year cycle is still playing out. We had, for the first half of this year, we had a similar move up as we did over here, and we're starting to see a bit of a pullback, and there is a potential that we see this, right? That we see some sort of pullback. Maybe we retest the lows, maybe a little bit lower around 12K, and then we have the halving over here in April. So let's say it does that, and then maybe it continues higher from there, and we start the bull market after the halving over here, right? We can see something like that. That is completely still a possibility, and obviously the more time that goes by, the more we can start to see that is playing out or not. So just changing this to the weekly chart over here, you can see 200-week moving average in red, 50 in blue. So right now, we have lost the 200 moving average on the weekly, and that is simply just a bearish sign, okay? We reclaimed it here, we stayed above it, we bounced, but we couldn't hold it. And in fact, we got 2 weekly closes below, 3 now actually, where we went up, we rejected from it, and it just looks bearish. So until we reclaim this with a bullish close above it, weekly close, we have to assume here this trend on weekly could potentially here be flipping bearish. The bulls kind of line in the sand here. The 50 is still holding here as potential support. We are still above it. So you can see that is about 24,000, and that is my next level that I'm looking for as support. That could potentially be tested this month, probably likely. And then we have to see, is that going to hold as support or not? If it hits that and it bounces and it holds as support, that is going to be good for the bulls. And then hopefully we reclaim that 28.5K, and then we are back to fullish bull trend. But if that 50-week moving average does not hold and we get a weekly close below that, then I think the chance of retesting the lows or lower greatly increases. So again, this is a whole bunch of if-then scenarios because nobody knows for sure, but it allows you to create a plan of what to do in certain situations. Okay, so if we touch the 50 and bounce, then it's looking more promising for the bulls. If we reclaim 28.5, then we are high probability full-blown bull territory once again and continue to 35K or higher. And if we get below the 24K, below this 50-week moving average, then I'm looking for a potential retest here of the lows here, or maybe even the 12K level that I've talked about a lot in 2022 and even in the recent video, which is basically just this whole level here, 10 to 12,000 should provide ultimate support if we do get further sell-off. So yes, this means there is a possibility that we might retest the lows or go lower before the halving, okay? Just like we did in March of 2020. But keep in mind, and I will keep saying this, there's always the if-then conditions. If we do go that low, it is probably going to be the best buying opportunity that we are going to get for Bitcoin and altcoins before a massive upcycle that you saw. The same thing in March 2020. It was super scary. It went from 10K to 4K in a matter of a month. Okay, and it looked like everything was dead, and then look what followed after. So you bought $5,000 Bitcoin. Even if you held it to 50K, that would be a 10x. And on altcoins, we saw many, many more. So yes, this might be annoying, might be scary, but if you're prepared for it now, that's why I make these videos and make these updates, even in the bear market when most people give up and stop updating and stop talking about this, because there is just very little interest in the market right now. But now is the time to pay attention during the boring times, during the times when there's fear, when there's FUD, when the market crashes. And of course, be safe with your crypto. Keep it in wallets that you control. Don't keep tons of money on exchanges, no matter how good the exchange might seem to be. The best way to control your crypto is to control the wallet that you have it in, right? So obviously just a little reminder there. But imagine we do go to $12,000 or $10,000 Bitcoin in a short period of time. I do believe it will be short-lived because, again, the Bitcoin halving is coming in April of next year. That's about 7 months out from now. So that means there's time for us to go down maybe 1 or 2 months, then recover within that 7-month period. You can see here, similar thing. It went up, down, up, here, over here. You can see that was a period from February until about June. So 4 or 5 months, quick drop. Everybody got liquidated. Everybody panic sold the bottom, or most people did. And the smart money just ended up buying and adding there. The key here, again, is to make sure you are not over leveraged and overexposed. That is the biggest key. Do not become a forced seller. Okay? For me, I'm fine with that. If it drops to 10K, that's okay. I'm not over leveraged, right? What I have in there is perfectly okay. I can handle the drawdown, and I still have risk capital to buy that drop if we get it, because I know what happened last time. I know what happens every time. When that peak fear is there, when that peak crash is there, of course, there's always a risk, right? It could go to zero, which is why you only speculate and invest with risk capital that, if things go completely south and absolutely worst case, that you can still pay your bills and you'll still be okay, right? But the risk reward at those times when things crashes that bad and the sentiment is that bad is huge, as you saw this last time. So basically, to sum it up, to give you my conclusion here, the charts are leaning technically bearish on the weekly, on the 3-day chart. Okay, we need to reclaim 28.5K to get fully bullish. Until then, our next kind of line in the sand support is 24K, the 50-week moving average, in my opinion. If we lose that with a weekly close below, I think it's much more likely that we retest the lows, or maybe even this final support of 10 to 12,000. If we do get that drop, I believe it will be short-lived. The halving is within 7 months in April next year. That has kickstarted previous runs, and I think it will do that again. I think the chance is very good that it will. And at the same time, again, if it does drop that low, I think it will be an ultimate buying opportunity. Risk capital only, of course, not financial advice. Make your own decision. But I will be buying that dip with all the risk capital that I have if we get that, because I believe that we will bounce. And even if we don't get a full-blown bull market like that, I think we will see a significant rally or a significant bounce, and being able to scoop up altcoins and being able to get a 10, 15, 20x on any money put in at those lows seems like a very good risk reward to me. Okay, so just real quick, I want to cover the dollar index and maybe just run through a few other things at risk of making this video a bit longer than it usually is, but I want to bring you the info as best as I can. So make sure to smash the like button, subscribe if you haven't, share this with anyone who would benefit from it, because of course I want to keep you guys updated. Okay, so the key is the dollar index, because there's direct inverse correlation between this. I've made videos on this on the channel. You can search for that if you want. So basically, when the dollar index goes down on the weekly chart, then we're looking at bullish movement in crypto and in stocks, and vice versa. If the dollar index continues in an uptrend, like we saw in 2018 over here, or like we saw in 2022 over here, we obviously have our bear markets and our bearish action in crypto and in stocks. And you can see the key right now is the 50-week moving average. We are still below it, which is good, but we are right on that edge. If we reclaim this and we continue higher on the dollar index, then we are looking at potentially that scenario, what I just explained on Bitcoin, where we are going lower and potentially the lows or a little bit lower. So if the dollar index goes on another big run here, it reclaims the 50 moving average, and it goes to, there's a fair value gap here, as you can see, somewhere between 108 and 110, then we are looking at that potential downside in crypto and stocks for the short term. Okay, again, I do believe this will be short-lived, maybe a couple months, maybe less, and then it reverses again. It will be another really nice shakeout if we drop I think just time-wise and sentiment-wise, it takes a lot of mental conviction in your positions and in understanding these markets to be able to withstand this. The time that it's taken, almost 2 years here in the crypto market of going up and then dropping and going up and dropping, and every time it just, it kind of erodes that hope. It's just like this ocean, this wave just pounding at your conviction of, should I still hold my crypto? Should I buy? And that's why it's so key. That's why I keep making these updates. Stay within your risk capital. If you believe in the long term, in the cycles, again, it's cycles, it's markets, So markets only go down so much because at some point, everyone will have sold, everyone will have been liquidated, and going down further doesn't really get much benefit from it. So then the accumulation phase starts again, which I believe we've been in for the last year or so on a higher time frame. Just the whales are accumulating, right? The weak hands are getting shaken out, and all that remains is the people who are just never going to sell, even if it goes to zero, right? Those people don't care. They've been holding. They're going to continue to hold. So once everyone who wants to sell has sold, right? They finally panic sold. They've finally given up. Then the smart money has accumulated, and their bags are filled. And the only way that they profit is when the price goes up, so that retail shows interest again. All the people that panic sold at the bottom, they start getting interested towards the top. They FOMO back in, and they put their money in at the top. Smart money sells and the opposite, and that the cycle repeats over and over again. This is as old as time. It's just all the financial markets. It happens in stock markets and all other markets, and it happens in crypto too. So we have to wait and see here what's happening. Keep your eye on the dollar index. A weekly close back above here likely leads to more upside in the dollar index, which leads to likely more downside in Bitcoin, crypto, the stock markets, US dollar pairings on Forex, even gold, and so on and so forth. It's basically just an inverse DXY trade. So keep your eyes on that. If we do reclaim this, I would expect maybe 108 to 110, potentially on the DXY. And that all kind of lines up with what I've previously said. And then before wrapping up this video, I want to share with you Ethereum. Okay, so let's take a look at the weekly chart over here. You can see the 200 and the 50-week moving average are both at exactly the same spot, about 1620. The price is sitting right on there, and there's just basically a lot of bearish pressure over here. So if Bitcoin continues lower, Ethereum is probably going to go lower. Altcoins are going to go lower. I think if this breaks below these two MAs, it's probably going to be more bearish, and we are once again then looking at a retest of potentially the lows, right? Okay, maybe we can say we can put a fib golden pocket on here, and maybe this low over here about 1380 would be the first potential chance for a bounce. If it drops here and then potentially bounces back, that is a possibility. Obviously, if it loses that, we are probably looking at retesting the lows potentially in Ethereum. And the interesting thing is I actually did make a video about this back in May about an Ethereum short position where we had this as a range, we had the deviation above, and we were looking at the technical targets of this range of the short trade being the bottom of the range, about 870. And it didn't look like it for some time when we got the move back up to the top of the range here, but it's still perfectly played out as a range trade so far, right? If you would have entered here, the stop at the high, that trade would still be valid. Now, I'm personally not holding this trade anymore, unfortunately, because it actually was right so far. But if it continues lower here, there's still a possibility that technically this retests the bottom of the range, which then basically verifies everything that I've said about Bitcoin potentially testing the lows or new lows, the dollar index continuing higher, Ethereum retesting the lows. Again, it's all probabilities. Nobody knows for sure. But if then, and as the chart changes, right, at the beginning of the year, it turned more bullish, and I was bullish about that. I said it reclaimed the trends, and we had 6 months of upside. Now we're starting to look at the inverse of that. We're losing key MAs, and based on the system, it looks like more downside is coming, unless we invalidate that with reclaiming those key MAs. And like I said, 28.5K is key for Bitcoin. If we reclaim that, we're back to full-blown bull trend. For now, there is potential to retest the lows or lower, just like in 2019, but I believe it will be the best opportunity we get to buy. You can be patient, you have risk capital available, you're not overexposed, wait for that, and then I'm looking to buy. Obviously, I'll continue to update as we go along. And then again, it will be short-lived in my opinion. We have the halving coming up. We'll probably rebound, probably see some external news, whatever comes out. Probably going to see a lot of stimulus come in, a lot of money printing, and then we see another major run in risk assets, both in stocks and crypto. I still believe we get that before any sort of major global financial crisis or anything like that. So I know this update was a bit long, but I appreciate you sticking with me. If you enjoyed this, let me know in the comments. Let me know your thoughts. Smash the like button, subscribe, get this out to more people. And if you're looking for a crypto exchange, BYBIT, they gave me this hat. They didn't tell me to wear it or anything like. But I do use BYBIT as a spot and crypto exchange. So if you're not in the US or any of the restricted countries, you can use my link in the description down below. Create an account. You can trade here, day trade with leverage. You can also buy spot. In my opinion, I've been using them for a couple of years now. They are really good. No issues with withdrawals or anything like that. Good for trading. Good mobile app. And, you know, it's a good place also if you want to short crypto and hedge your spot portfolio. You can do so. Link in the description down below. Thanks for watching. Have an awesome day, and I will see you in the next video.